Good afternoon from Los Angeles. It's Alissa, Coram, and Chris Gessel here. The market just closed on this Tuesday. On today's show, we're going to be giving you some in-depth market analysis, why it might still be a bargain hunter's market. We're also talking about the Paylocity trade. But first, let's check in on those major indexes. We did finish up across the board, but well off of the highs. Nasdaq up about 0.2%. Intraday, it did close above that 7,500 mark, so that's the next psychological level to clear.
Yeah, and the Nasdaq also pushed a little bit higher above the 200-day moving average, which is nice. The S&P did the same thing. So, you know, from that point, we've been talking about that a lot, that this would be kind of a natural place there. We might get some resistance, and the market has kind of slowed down, but it's holding above that, so that's good. But I guess the interesting thing today is, even though the Nasdaq was up above that 200-day, and you might be looking at your own portfolio, maybe didn't do so well today, especially if you're in a lot of growth stocks, because like FFTY was, even when the market was up 0.4% later in the session, it was basically flat on the day. And so we've seen that a lot, where the market might be up, growth stocks are down. The reason for that is there's a lot of bargain hunting that's still going on. That's
right. So when you're looking at, how do you tell, clearly looking at your portfolio is the first place you can start, but how are you tracking this? Clearly we had such a severe bloodbath, as you could say, in the fourth quarter, but how are you figuring out what type of market it is, what type of buying is going on?
Well, I do something very simple. I've got a list of every stock that trades more than $20 million in dollar volume, and that's just price times average daily volume. And that's just a good level of institutional support, where institutions are going to be active and there's a lot of liquidity. And I'll just take a look at the biggest winners and the biggest losers each day. And I don't know, maybe 15 minutes ago when I was checking it, out of the 20 stocks that were up the most, only 3 were at new highs. Most of those that were moving a lot on a percentage basis were still below their 200-day moving averages, or still well below their old highs. And that tells you that there's still a lot of bargain hunting going on. I think that'll happen until, you know, we reach new highs. Then all the easy money in the bargain hunting will have been made, and institutions are going to have to look at companies that are actually growing rather than, you know, bouncing off the bottom to outperform the broad indexes. And so I think at that point, we'll start seeing a little more consistency between what the market's doing and what growth stocks are doing.
Well, even still, there are a lot of good growth stocks to look at least for the watch list. And we want to take a look at Paylocity. Shares finishing up almost 3% today. So we're going to go through the analysis here, some of the pluses and minuses. So when you first look at this chart here, a really deep base.
Yeah, absolutely. The stock lost 40% during the correction, and that's a level that always raises a flag for us, because when we were building the breakout leaders index, which is a ETF BOUT, we found that anytime we added stocks that had corrected 40% or more in their bases, it hurt overall performance. Now, that's not to say you can have some stocks that work, but in general, as a pond to fish from, it's not so good. However, there's a lot of things we like. So to me, that's the biggest negative about Paylocity, is that big, deep base.
Right, so definitely something to keep in mind there. But on the fundamentals, we're seeing strong growth, accelerating earnings, multiple quarters in a row here, 44% growth in the last quarter, and continuation of that acceleration expected.
You don't normally see the estimates showing continued acceleration, so that's something that's interesting to see.
That's right. And then we also have strong sales growth here, of course. And then back to the technical side, seeing that relative strength line hitting a new high before the new price high is extremely positive. We really like looking at that relative strength line.
Yeah. Anytime you get an RS line that's making a new high before the stock makes a new high, that is a very bullish indicator, something that we talk about all the time. here at IBD, and it's something on leaderboard that we just hammer over and over. Is that RS line near a new high or making a new high ahead of the stock? That's
right, and I think on the last show that we did together, we talked about the importance of sponsorship, and sponsorship definitely strong here with Paylocity, an enterprise software name. So we have Fidelity OTC in it since the IPO.
Exactly.
So, so sponsorship is something important as well. Why is it so important to take a look at sponsorship?
Well, because anytime, you know, if a stock is going to go up 100 or 500%, there's got to be some big institutional buyers making that move happen. And so we have a group of stocks, we call them Bill funds, because these are Bill's favorite funds. He was familiar with the managers. Many of them at times were clients of the research company.
Right.
And so we keep track of these mutual funds to see what they're buying, because we know in general they kind of look at the market in the same way. And so if they have really done their due diligence and they're buying these stocks that we're interested in, that just gives us a nice level of confidence.
Definitely.
And two of those funds, Columbia Acorn and I think Wasatch Core Growth, opened up new positions in the most recent quarter. So that's always nice to see when they're moving into a stock.
Yeah, so as far as where we go from here, what would we like to see with Paylocity? I mean, it's been up 8 weeks in a row, 60% off the bottom.
Right.
It's such a deep base that we've seen. So what kind of action would we like to see from here?
Well, ideally, I'd rather not see this just break out of this cup after running up 60% already. So if it takes a pause for a week or two and makes a handle, that would be nice. The other thing that could happen here, maybe it breaks out, maybe it doesn't, but if it can make a flat base, that's something that we see from big winners when they break out or come out of bases and then they take another little rest and then they really start to move. So that would be another ideal situation. Sometimes it's, you know, maybe it's just going to blow through that buy point and you're going to have to wait for a pullback. But however it goes, it's the type of stock that we like to look at.
That it is, and we did have earnings come out in recent weeks, so that was a catalyst for some of the recent gains. And I guess, you know, looking forward, that risk now, we're not going to see that earnings risk until the next quarterly report.
Right. Exactly. So now you don't have to worry about a big gap down there. There always could be something out there, but it's not going to be because of earnings anytime soon.
And this is a strong group, so we like looking at stocks from strong groups too. All right. Thank you, Chris, for all your insights, and thank you for joining us today. We hope you check out all of our videos and stock analysis at investors.com. And just letting you know that we are transitioning. Our afternoon show will be our primary daily stock analysis show, so we will be transitioning out of the morning show, but more great content throughout the day coming for you. Instead of that, focusing on analysis of individual stocks, which is what we love to do.
Absolutely.
All right, everyone, thanks for joining us, and we'll see you back here tomorrow.